Professional job searches currently average 3 to 6 months. That is a hard reality when the separation email hits and shock sets in. The difference between a temporary setback and a financial catastrophe is dictated by your actions in the first 90 days. Building a stabilization plan right now is your strongest defense. Before mapping out the strategy, gather your raw materials. Pull up your recent bank statements, your monthly bills, your severance documents, and your employment history for the last 18 months. Organizing these specific documents shifts your brain out of panic mode and into problem-solving mode. They provide the necessary foundation for your recovery strategy. Step 1 is understanding your exit terms. Read every word of your severance package before signing. Look specifically for restrictive clauses, like a non-compete or a release of claims that waives your legal rights. You have the option to negotiate.
Do not touch your 401k to extend this runway. Cashing out retirement accounts triggers heavy taxes and a 10% penalty, instantly wiping out years of compound interest. Doing this math is uncomfortable, but it removes the paralyzing fear of the unknown and dictates the pacing needed for your job hunt. Step 2 is creating a crisis budget to stretch that timeline. Pause every non-essential subscription immediately and drop discretionary spending to near zero. You must proactively call all of your lenders. Contact your mortgage servicer, auto lender, and credit card companies about hardship programs or deferment options before you miss a payment. If you have federal student loans, apply for an income-driven repayment plan. If your current income is zero, these programs can drop your required monthly payment to $0. Triage your cash. Priority 1 is absolute survival: housing, utilities, and food. Next is priority 2. Transportation, health insurance, and minimum debt. Everything else is funded only if the first 2 are covered. This level of severe budgeting serves a singular purpose. It artificially stretches the runway timeline you calculated in Step 1. Step 3 is securing your safety net. File on your state's Department of Labor website today. Do not wait for severance to end, as benefits only start from the date you actually apply. To file, you will need your Social Security number, your employment history for the past 18 months, and your banking information for direct deposit. Most state systems replace about 40 to 50% of your previous weekly wage, typically paying out for up to 26 weeks. You are legally required to complete weekly certifications to prove you're searching for work. Miss a week and check stop. If you take gig work, accurately report those earnings during certification so the system adjusts your payout. You pre-funded the unemployment system through payroll taxes throughout your career. It exists specifically to buy you the critical time needed to secure a proper role. Step 4 is bridging your healthcare gap. A job loss triggers a 60-day special enrollment period, allowing you to choose new coverage outside of the standard open enrollment window. This matrix outlines the problem with COBRA. In the left column, you must pay both your share and the employer's share. Your premium could easily exceed $800 a month. Instead, check healthcare.gov. If your projected income drops below $60,000, you qualify for subsidies. This can drop a marketplace plan to under $50 a month, a fraction of COBRA. Taking 20 minutes to quote the marketplace can save thousands of dollars, directly preserving months of your financial runway. By completing these 4 steps, you have stopped the financial bleeding. Your baseline is secure and your stabilization plan is active. Now, shift your focus to the next 60 days. Pursue income streams in parallel with your job search. Tap into freelance work or consulting to ensure cash is flowing while you look for a permanent role. Relying on job boards is often the slowest path to employment. Because 70 to 80% of professional roles are filled through referrals, networking on LinkedIn is your most effective tool. Following this stabilization plan buys you the time to interview at multiple companies simultaneously. By using competing offers as leverage, professionals often turn a layoff into a 10 to 20% salary increase in their next role. You can manage this. If this playbook helped you, share it with someone else going through a layoff. Drop your own recovery tips in the comments below, and subscribe for more strategies to protect